Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
So despite the coronavirus emergency now global, stocks in New York closed at record highs. What's happening in the global markets?
Sure. As you said, U.S. market is hitting the record highs. If you look at the Dows and S&Ps and NASDAQ, all seems to be hitting the record highs. Dow was up 0.6%, S&P 500 was up 0.73%, NASDAQ was up 1.13%. Particularly the rise of the NASDAQ is quite astonishing, that has broken to 9,600 territories. Quite soon might be breaking 10,000 territories. The global market as a whole also seems to be recovering quite nicely. If you look at the world ETF, the MSCI World ETF, that price is actually hitting the record highs once again after falling sharply by close to about 5%. The reason for that is because U.S. market seems to continue to be doing well. And also the main reason for this such a strong rise, despite all the concern about the novel coronavirus issues that affects the global economy in terms of the growth rates. It's clearly because of the liquidity condition that's happening in the global market. If you look at the U.S., they're injecting quite heavy amount of liquidity in the short term. Also, China obviously injecting as much as $174 billion worth of liquidities. They're lowering interest rate as well. So there's quite a bit of a amount of liquidity that's happening in the market that it's overseeing the concern about the economic slowdown that you will see in China. If the number of patients rise slows down, then they think that economic growth rate itself also will recover in the second quarter. So people are betting that the economic recovery will happen in second quarter, despite the concern about the first quarter.
Well, here in Korea, we see the KOSPI was up quite a bit today after a couple of sessions of losses. The Korea Exchange says volatility, though, has been high so far this year. What's the story in the Korean markets?
Sure, as you said, the Korean market is quite volatile because of its dependency on China. If you look at the overall market, yesterday and the day before it corrected, but today it's up again around 1%. Hitting over 2,200 KOSPI and also 680 KOSDAQ. KOSDAQ was also up about 0.9%. If you look at the correction that we saw in terms of KOSPI as well as KOSDAQ, it was as high as 8% territories, which is one of the highest level of the losses that we saw because of the coronavirus issues. But it has recovered quite nicely from its bottom. In terms of the economic impact, the Bloomberg estimates that Korea will be one of the highest hit economy because of China's slowdown. It is probably the case because Korea exports close to 1/3 to China, and that would be quite a bit of a showing slowdown. And also, Korea is importing quite a bit of for the productions. They have a lot of production facilities based in China, so Korea will be affected due to that. But despite all that, KOSPI is doing well is because their dependency on global economy and that their dependency on U.S. is one of the highest as well. And that there's a huge amount of liquidity injected throughout the global scale, as well as Korea is thinking about probably lowering interest rate in order to fight for this corona impact.
Well, meanwhile, we see oil prices have fallen to a 13-month low. How much of this is the coronavirus, and where do you see oil going from here?
Well, quite a bit is from the coronavirus, I think. If you look at the coronavirus outbreak, it seems to be a black swan for oil and energy industries. If I look at most of the energy industry's valuations, especially in U.S. and other countries, it doesn't look cheap, despite that it has been one of the biggest underperformer. Main reason for that is because of the shale gas production's increase that affects the price to be much lower than used to be. And clearly now with the demand from China slowing down much faster than expected, and China is the #1 importer of oil, even greater than U.S. since 2017. So therefore, if there's a slowdown in the various factories, productions, and many areas of oil consumption from China, clearly this will have a negative implication. So once again, the oil price decline is not because of the production side, but it is because of the demand side slowing down due to China. That will have one leg decline for the overall range trading of oil prices. In the past, oil prices were range bound anywhere between $55 to $65 range. I think it has gone down by at least $5 lower. The range bound should be around 50 as the bottom, and probably on the top, maybe at most $60. Clearly, the additional production coming from the shale gas is a major concern. Despite that, though, the overall supply side can be adjusted in order to keep the oil price at $50 range. So we think that it is at the bottom, and we can look for some opportunities. But in terms of the upside, we think that it is limited.
All right, Mr. Yu, got it. Thanks so much for coming on today and sharing your insights. We appreciate it.
Thank you very much.